The global economy is on edge. A trade war between the United States and China, the world's two largest economies, has sent shockwaves across the globe. This conflict, rooted in economic and geopolitical tensions, has disrupted supply chains, sparked market volatility, and raised concerns about a new era of protectionism. The trade war began in 2018, with the Trump administration imposing tariffs on Chinese goods. The U.S. government argued that China engaged in unfair trade practices, including intellectual property theft and forced technology transfer. These actions, they claimed, harmed American businesses and workers. China, however, denied these allegations. It viewed the tariffs as an attempt to contain its economic rise and retaliated with tariffs of its own on U.S. products. This back-and-forth escalation of tariffs marked the beginning of a protracted trade war with far-reaching consequences. The initial hope was that the two countries would quickly find common ground and resolve their differences. However, the trade war has persisted, casting a long shadow over the global economy and raising questions about the future of globalization itself. The trade war has been characterized by a tit-for-tat exchange of tariffs between the U.S. and China. These tariffs, essentially taxes on imported goods, have increased the costs of doing business for companies on both sides of the Pacific. The United States imposed a 145% tariff on a wide range of Chinese goods. This affected consumer products, electronics, and machinery. China responded with retaliatory tariffs of 125% on U.S. goods, targeting agricultural products, automobiles, and chemicals. These tariffs have had a significant impact on businesses and consumers in both countries. American businesses importing goods from China have faced higher costs, forcing them to raise prices or absorb losses. Chinese businesses exporting to the U.S. have faced similar challenges. American consumers have seen prices rise on everyday goods, while Chinese consumers have experienced shortages and price hikes on American products. The tariffs have also disrupted global supply chains. Companies that rely on components or materials from both the US and China have had to adjust their sourcing and production processes, leading to delays and increased costs. The trade war has also highlighted China's dominance in the production of rare earth minerals. These minerals are essential components in a wide range of high-tech products, including smartphones, electric vehicles, and military equipment. China controls a significant portion of the world's rare earth reserves, and has used its position as leverage in the trade war. In recent years, China has imposed export restrictions on these critical minerals, raising concerns about potential disruptions to global supply chains. The United States, heavily reliant on China for rare earth minerals, has been particularly vulnerable to these restrictions. The U.S. defense industry, which relies on rare earths for advanced weapons systems, has been particularly concerned about the potential impact of a supply disruption. In response, the U.S. has sought to diversify its sources of rare earth minerals by exploring domestic production and partnerships with other countries. However, these efforts will take time and significant investment to yield results. Section 4. Economic tremors. U.S. and China feel the strain. The trade war has taken a toll on both the U.S. and Chinese economies. In the U.S., economic growth has slowed and inflation has risen. The tariffs have contributed to higher prices for consumers and businesses, while uncertainty surrounding the trade war has dampened business investment. China has also experienced economic headwinds. The tariffs have hurt Chinese exporters, and the trade war has contributed to a slowdown in Chinese economic growth. The Chinese government has taken steps to stimulate the economy, but the trade war remains a drag on growth. The International Monetary Fund, or IMF, has warned that the trade war is a threat to global economic stability. The IMF has downgraded its global growth forecasts, citing the trade war as a key factor. The organization has also warned that the tariffs could lead to a global recession. Section 5. Global ripple effects. A world caught in the crossfire. The US-China trade war has had ripple effects across the global economy. Other countries have been caught in the crossfire, facing disruptions to their own trade flows and economic uncertainty. The trade war has hurt global trade. The World Trade Organization, or WTO, has reported a decline in global trade growth, citing the trade war as a major factor. The WTO has warned that the trade war could lead to a collapse of the global trading system. The trade war has also led to increased volatility in financial markets. Stock markets around the world have experienced sharp swings in response to news and developments related to the trade war. This volatility has created uncertainty for businesses and investors. Developing countries, particularly those reliant on exports to the US or China, have been hit hard by the trade war. The tariffs have disrupted their supply chains and reduced demand for their products.